So I think currently, as we speak, I would really prefer a company which has got steady growth, some cost synergies or revenue synergies, and also healthy margins. So if you look at Z Sony, I think I would prefer that amongst a lot because they stand at all three parameters. And last but not least, I think also one part I missed out is the OTT business scale, which is there. So I think on all these four parameters Z and Sony really, fits the bill well here because of synergies. We will see a good growth rate. We might even see better bargaining power over medium to long term basis. We might see some cost synergies as well. We also have this OTT business, which is kind of going to be big, and it might give a tough competition to other platforms in the country today. So that's where they are placed. That's why the valuations for Z Sony will be much higher as compared to any other broadcast OTT. Secondly, on a Sun TV, if you see, I think in terms of the company, the growth rate for the company historically has not been that great. As far as competitive intensity is concerned, for the regional genre, it is only increasing as we speak, and we have really not seen any visible signs of any innovation from Sun TV around content, which could lead them in terms of a higher viewership share. And unless that doesn't happen, they may not end up gaining market share on TV. So I think that's somewhat a lag which we see in terms of profitability, it is far superior. Sun TV is a far superior profitable business as compared to a Z Sony or any other broadcasting entity. That's purely because they don't own the IP. Most of the IP is basis ad share. They have been transitioning away to the commission-led model from the ad-led model, but I think that's going to take some time. And the margins even today are 55 to 60% kind of EBITDA levels, which is almost 2 to 3x. Third problem I think for Sun TV is that they haven't really scaled up on digital as of now. Uh, by that I mean to say that Sun Next is a platform. They do have content, they do have films, all those things are very valid. They have a strong recall as well. But I think to scale up to the next level or to actually increase the revenue base or to actually compete with the global giants, you have to invest a lot in terms of original content as well. So the original content would be in the form of web series, in the form of original movies which are made for digital. By purely selling catalog content, definitely a platform like Sun TV is doing very well in terms of revenue base, in terms of profitability. But if they were to inch up the next level and if they were to actually, garner a larger share of the overall India OTT market, they have to really invest into original. So I think that is a key monitorable, which could lead to some kind of an upside potential or kind of a multiple rating scenario for a Sun TV. So Sun TV, I think, would be the second year in terms of pecking order, where as far as valuation multiples are concerned. Thirdly, in terms of if you look at the TV18 business, again, the business there in terms of the TV business, they do have their own pros and cons. I mean, they are good in the GEC urban genre. On regional, it's very mixed. Some genres they are doing well, some they are not. I think digital, there's going to be a big boost for them because clearly, there is a big potential sitting out there. If you look at the eyeball numbers for IPL, it is the most compelling property on any OTT and digital video format. And video advertising market alone is growing by 35-40% kind of a number. But again, the price that they have paid for the rights, I mean, I'm not saying that it is something really expensive or they'll never break even. But I think the break even will take some time because right now, if you look at monetization opportunity, digital that way has not kind of been very well equipped in terms of monetization. It is more led by a niche set of advertisers. I mean, there are mass advertisers as well, but the kind of share of spends that they allocate to digital is still about 30-40% of the overall ad spends. So I think there's still some time wherein we see a big scalability factor or wherein we see some kind of profitability for the digital rights as far as IPL is concerned, which TV18 has bought. So I think solely because of that, at least in the near term, the valuation multiples for TV18 might be at the lower end unless they're able to do something very different and they're able to achieve profitably on the digital rights that they have bought for IPL.